My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. On the eve of tomorrow's Federal Reserve meeting, after 7 straight updates for the NASDAQ, well, we have to wonder, what does Jay Powell have in store for us? Are we getting too greedy here? Dow gaining another 139 points. S&P climbed 0.37%. NASDAQ advancing 0.34%. Many investors, especially the really rich ones, believe that the Fed must slam the brakes on the economy immediately to stamp out inflation. They want Fed Chief Jay Powell to cut out the bond buying, maybe even start raising rates. That way we could crush the spiral of rising prices. Now, if you own a lot of municipal bonds, a favorite investment of the super rich, then that would be fabulous. These big money guys, in my college days, I probably would have called them overlords, believe that Jay Powell's asleep at the wheel. Or worse, they see him trying to engineer a tight labor market, something that's terrific for people who actually work for a living, but it scares the heck out of the business owners. As the inflationists see it, Powell's a softie, and his policies will only ruin the poor as well as the rich, which is absurd. But these policy debates always escalate to ridiculous places. In my view, the whole debate is beside the point. What Powell knows is we've got shortages everywhere, and they can't be fixed by sending the economy into a tailspin. You can't get more wheat or corn or semiconductors or oil and gas, for that matter, by raising interest rates. Instead, he wants to let the situation play out, offering a series of gentle actions before he does anything extreme that might create havoc in the economy, throw a lot of people out of work. Powell wants to give everyone a chance to get a decent job. Isn't that a nice idea? It's kind of like the Constitution. Even if that means wealthy investors could see their municipal bond payouts get eroded by inflation. Not in the Constitution. Is that so wrong? Let's figure this out in the context of what we've learned this earnings season, what we learned in last night's interview with Commerce Secretary Gina Raimondo, who told us basically no chips. You might have seen the craziness in Avis, the rental car company, today. It saw its stock. I don't know if you saw it. Stock ended up doubling. Okay, it started here. It was a 108% gain. Kind of a pit stop up here, as the short sellers who've been betting against it capitulated in a blaze of glory. By the way, it's not unlike what we saw earlier this year in AMC and GameStop, but no one was talking about it enough. That's why I'm bringing it up right now. It's amazing how wrong some of these bearish hedge funds can be. I'm amazed that anyone would short a stock when they have zero familiarity with the facts. And what are the facts with Avis? Simple. America's out of cars. There just aren't enough of them, and we don't have the chips to ramp up production. So we've got an automobile shortage, and right now the biggest agglomeration of autos that can be found are the rental car companies. Of course, historically, this has been a terrible business, too cutthroat. And there's always been a surfeit of used cars, and automakers dump their excess inventory on these rental car companies all the time. But I repeat, there are no cars now, certainly no surplus cars. So when Avis reported, it delivered an extraordinary set of numbers. It earned $10.74, $10.74. Wall Street was looking only for $6.52, and that's how you get this. The panic among the short sellers was so palpable, they immediately set the stock from $174 to $545. That's an ignominious price. That's GameStop at $400. Okay, right there, all right? Certainly reminiscent. While the stock ultimately ultimately pulled back to $357, it was a short seller's nightmare. I mean, the thing was down 100. You're up 100%. They're down 100%. Just like GameStop got a boost earlier this year thanks to the shortage of new consoles, Avis is killing it thanks to a shortage of cars. If they could find more vehicles, I'm sure they'd rent them out. But there are none to be found. And that has nothing to do with the Federal Reserve. It has to do with the labor market and the semiconductor shortage. Why don't we start with labor? Against all odds and bosses, the rank and file has spoken. We're not coming back to work the way we used to, so deal with it. Millions of Americans have left the cities for the suburbs or the country because they no longer need to commute to the office, and after a year and a half of zooming to work, their bosses can't make them. They can't. When you leave the city, though, you do need a car to get around. So demand is off the charts, unprecedented. And almost everyone in the industry, everyone except Tesla, was caught looking the wrong way. Second, we simply don't have enough semiconductors to ramp up new car production and alleviate the shortage. Remember, your typical new car might have, say, 150 semiconductors in it. But if an automaker only has 149 of them, they can't make anything. The Federal Reserve cannot produce that last semiconductor. Now, at some point, we could see some demand destruction. Not long ago, the conventional wisdom was that the housing market would keep booming. Remember that? But there was one lonely voice saying things can't last. Ivy Zelman, the best housing analyst in America. Turns out she still got it, because after an ever so slight increase in mortgage rates, we got a shocking reversal of housing fortunes. Look at what happened at the know-it-alls at Zillow. Gleefully cackling today. Yeah. These guys got in the housing flipping game. Oh, there's a game, all right. And they realized they were losing money all over the place. So now they dumped 7,000 houses, exiting that business entirely. Why? Because they didn't listen to us as we yelled at them constantly about, no. Because they were going down in value. Speculators get shaken out. Of course, this is very different from 2008, when speculators were regular people who could get a mortgage with no documentation, no money down. This time we're dealing with idiotic hedge funds and private equity funds who are renting out their properties with the idea of selling them as houses appreciated in value. We know that trade has run out of steam. Which brings me back to the autos. It's possible at a certain point that cars will become too expensive. When that happens, people will turn to mass transit or they'll stop moving from the cities to the country. And you know what? That's fine. That's the free market in action. Certainly, we will see big oil and gas companies cutting back. Right now, they're cutting back their capital expenditures in order to minimize their carbon footprints. But that pushes prices up. But that will not continue forever. Jay Powell recognizes it's only a matter of time before the oil and gas producers step up their drilling. Because in the end, these are for-profit enterprises. They're not going to leave money on the table forever. That will also alleviate some of the resin issues because plastics are a byproduct of natural gas. All right, how about corner wheat? Okay, if the Fed can play the role of planner-in-chief, rainmaker-in-chief, reprising that fantastic role of Burt Lancaster in the 56 Classic, then I'd say go for it. But Jay Powell is not a gentleman farmer. All he can do to stamp out high food prices is to raise interest rates, which will cause people to lose their jobs so they can't eat as well, so the demand for food will fall. If the alternative to that is prices going up a bit, you know what? I'm willing to take the hit. I know the Muni guys won't. The Muni guys. Where's William Jennings Bryan when we need him? I know people continue to bet against this market, hoping that Powell will do something foolish like the wealthy want so badly. I see shorts all over the place, but they're being taken out kicking and screaming like those in DuPont and Estee Lauder this morning. Two companies we told club members, investment club members, to buy into this morning's weakness when we sent out our morning memo. Or Bed Bath & Body Works. Bed Bath & Beyond, which, by the way, looks eerily like another GameStop. That's BBBY. After it gave you some good strategic news after the close, and the shorts are just getting blasted. Hey, you know what? Even the most boneheaded of moves, one that Powell won't make, will not help those short sellers. So the bottom line, if this market goes down tomorrow, thanks to the wrath of the rich who blame Jay Powell for nicking their munis and their mansions, then you need to view that as a buying opportunity and jump on the best themes, especially the semis, because that shortage isn't going away anytime soon. There simply aren't enough chips to be had, and there's nothing the Fed can do to change that other than destroying the economy, which is a less than ideal solution for a Fed chief facing reappointment, or not, by the President of the United States.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.